Hey everybody, Preston Brent here with our Trader Use Group Weekly Roundup. This is for the week ending January 16th, 2015. What I've got on the screen here is the E-mini S&P 500 futures, and let me just get it back up here for you guys. You're going to see here on this daily chart just the really interesting price action that we've got here. Now, just a couple of quick explanations for you. The red line is the 50 EMA, the yellow line is the 200 EMA, and then we've got the red dashed line up here, which was the intraday high formed in 2015, and it really happened on the very first trading day of 2015. And the blue line was the opening price on 2015. And then, of course, you can see where we are now for the E-minis. We're sitting at 2014 even. So if we take a look at this chart, again, if we step out and I put some perspective on this, you're going to see this channel that we've been in for quite some time. And it's a fairly tight channel. I mean, if we look at this, you're going to see it started back down here a few years ago. And you can see here, here's one December right there. Here's another December there kicking off. This is 2014. This is kicking off 2013. So you can see here the end of 2012. You can see this very tight channel. We only went up above it one time. And down below, we really penetrated it this past October. And then now all of a sudden, we've gone through it several times. So up until about 24 months, up until right here in October, we really stayed within this channel, and then we moved outside the channel here. Now, we played this to the downside. You can see that dramatic bearish divergence there. I called it out with our group when we made this higher high right here. I called it out, and I told them that we can expect a down move, just didn't expect how far. This shaded zone here serves as a very strong support element for us, and then this prior pivot high here also serves as a support point for us. Now, let me get the screen back up here for you guys, so it really starts, you can see what I'm talking about. If we come in here and let's just get the drawings off and let's get back into the normal mode again, you can see right here, let me just blow it up for you guys, just how dramatic this price move has been. Volatility is higher here. Now, what my system is calculating, and it does not mean that's what's going to happen, but it is calculating that, you know, we could come back down to this area right here, 1813, probably right around the 1800 area. If we break the 200 EMA, that is what's going to happen. We're going to have one final stop here, and then away we go. Understand, if I were to draw some trend lines on here, you know, I can draw that line on like that, and then this line like that. And that's kind of where we're going. We're making lower, and the line wasn't perfect, but lower highs, lower lows, and then right in this area here. So a key area for us going into next week is going to be 1968. We had a very strong day on Friday. You can see that big up move there. We did not take out yesterday's or Thursday's prior pivot high, which is sitting just north of 2024. So if we can break outside of that and then break this longer term channel, that will actually put us above the opening price of 2015, which would put the S&P in a positive area. But we're not there yet. I am not sure if we're going to get there. Understand what's coming up this week. Monday is a holiday for all U.S. markets. I know we got a lot of international members in our group, but Monday's going to be a holiday for U.S. markets, although a lot of the futures will be trading. But the equity markets are going to be shut down. So it's going to be a light week, but then or a light day on Monday. Later this week, on the 22nd of January, it's going to be a big day. We got the ECB coming out, and they're announcing whether they're going to stimulate their economy or not. Now, there's rumor that they're talking about putting together a 1 trillion euro stimulus package. That is going to be very bullish for the market should that happen, and very bearish the euro. We've been bearish the euro for a while. So we need to watch this price action. Now, as we always do, I take us down to a 120-minute chart here. And let me just put it on the 120, get the chart back up here. You can see right here the key pivot highs and the key pivot lows that have now established themselves. Until we take one or the other out, we are still in a down mode, right? We are still in a down mode. We got these lower pivot highs, lower pivot lows, just like this. And so, as I said before on the daily chart, just slightly north of the 2024 area, right around 20, 26, 27, that pivot high there, okay? If we do not take that out, and let's say we come up and roll back down, then we're going to be back down in the smack middle of it again, okay? So just understand, we are still in a down mode. Even though Friday, we spent most of the day moving up like that. But that was because we were down at the low, down in this area here. We came down and almost hit a key pivot point of 1968, bounced back hard up. So what do we look for this next week? Well, again, the markets are expecting a big stimulus package out of the ECB on the 22nd. And that will drive the markets, folks. It will drive the markets. Now, we had very low inflation come out on Friday. So that tends to push back when a lot of the money center, the funds, large funds, and mutual funds believe that the Feds are going to push back when they're going to raise the interest rates here in the U.S. But the bet is still on that the Feds are going to raise the rates in the U.S. before they do in any other country. And the bet was the second country to raise rates would be Britain. But you can see on this 60-minute chart where we're sitting right now. So I think, and this past week was a monthly option expiration period. The markets tend to be a little bit bullish just due to arbitration, ARB rolling, and big funds moving index rolling from 1 month to the next. It tends to create a little bit of a bullish bias in option expiration week. So that's what happened, and you can see where we're sitting now. So if we go back to the daily, again on the E-minis, you can see here the 200 EMA is sitting at 2026, which is just slightly, almost right at that prior pivot high that really showed up more on the 2-hour chart. So we need to clear 2026, put that number down. That's the number we're looking for on Monday or Tuesday to clear and hold into close. The downside is 1958. Now, we finished at 2013, but we could hit 1958 in a day or two. Very quick, as you guys can tell by the way the markets move. So typically, if you look at this pattern, you can see a downward stroke like this, right? An upward stroke like that, a further downward stroke like that, another upward stroke like this, and then like that. So this is the favored price action to bring us down in this area. This is how the markets typically move, and they move in these channels. We just happened on Friday to move from the bottom of a channel up. So now we're working our way up. So we could do one of these kind of moves on Monday and or Tuesday and then roll back over. So we need to watch for this, all right? Again, if we take out the 50 EMA, which is at around 2026, and it can hold into close, then that gives us more. Then I think we're going to take out the opening price of 2055 and move back into the positive for 2015 for the E-minis. All right. So that is what I'm seeing right now in the markets, the way these charts are lining themselves up. If we come in, and let's look at volatility. Let's get the chart back up here for you guys so you can see it. Here's a daily chart of vol. You can see vol is still elevated. It closed the day on Friday almost up 21. It's at 20.95, so call it right at 21. The vol fell only 6%, just a little over 6%. Now, with that big up move we had on Friday, you would think it fell further, but it didn't, because we got a lot of things coming up next week, primarily the ECB, and that can move the markets. Now, I believe they have some of that priced in, but if they don't stimulate enough, you're going to see the markets tank. And so that is the risk coming into the week. So you can see vol right here still elevated in this move here. And if we come back over and then look at the other market that I'm watching very closely, which is U.S. Treasuries, it reversed hard on Friday, just like the U.S. equities reversed hard on Friday the other way. You can see here with Treasuries. Now, I mean, this channel right here with the blue shading on either side represents this started out almost on January 2nd, 2014. And you can see we've just kind of fairly stayed in this channel. We've had these dips. You know, well, that's not what I wanted to show you guys. Let's go that. We had these dips in the channel, you know, like that. They were like, you could say that right there was a cup and saucer right there. And then we actually cleared it, moved up, came down. It kind of served as support, and away we went right here. The odds here clearly favor a pullback into the center of the channel, possibly down to the lower end. So we could have some selling coming into the ECB should they do what they need to do, and that'll put the bonds here. But we're still very elevated in the bonds, and we're still in this up channel here. You can see the trajectory of the 50 EMA. It's almost a rocket ship. Even the 200 EMA is just, I think this has got to pull back into this zone here. That's what the chart action would seem to indicate here, a little bit of a pullback. There is zero bearish divergence. I mean, none. So I'm not looking for a big dramatic pullback, just a little bit of a softening in the bond price. I don't think we're ready for the big pullback just yet in bonds. At some point it will happen, but we're not there yet. And then if we look at the euro, we've been short the euro, and I've had our members getting short the euro for quite some time. Look at this. This is a ugly chart here. I had said my target for the euro is right around this colored bar here, right around 108. You can see it's just been really caving. And it's just, there is no bearish divergence. There was mass selling here. And the other thing that happened last week, the Swiss bank, they removed their cap on the Swiss from to the euro, the benchmark to the euro of 120 to 1. And they did that because they knew the ECB was going to come out and really tank the euro, and it would have forced the Swiss to come up with a lot more money to keep that threshold in place. So they removed it, and it created a lot of problems for people. A lot of people went bankrupt last week. A lot of brokerage firms, FCXS, they were rescued by an investment bank. They were short 260 million. Just really, really bad. That's why you got to be careful when you're out there trading, especially currencies. It's very popular, but when their books were audited, over 70% of the people that trading currencies lose money and are down. So you got to know what you're doing, guys. And if you are trading, you got to have stops in there because you'll get wiped out. And even then, you got to trade with a very large, recognizable firm. Otherwise, that firm, if it's not well capitalized, then they're going to go broke as well. So that's why it's very important. But anyway, with the euro, you can see where we're sitting right now. We're down to 115.90. And we can go a lot lower. If I come out to the daily, to the weekly, I'm going to show you guys here just where it can go. And if we just go back out in time, I'm going to put some on here like this. Look at that. This is a weekly chart. It is ugly. That's where I was projecting we can go. And this, excuse me, this just takes us out to the summer of 2015. And if I tie in some key pivot points over here, you're going to see here some of these key pivot points, and that would be a key one for me. And there are a few others. Here's another key one here that we've just taken out, right? We just went below that key pivot point. So the next one down is, 107.86. I said 108.7 is kind of the center. So that's kind of where I was forecasting this thing to go. There's no bullish divergence here, so we are clearly in the death spiral here. Kind of looks like the oil chart. So this is where we're sitting right now with the euro. We're short the euro or FXE, one or the other. It doesn't make any difference. The euro futures is a good one, good place to be as well. The British pound, again, Same thing with the pound. If we just, let's get it back on the screen here. You can see here we're in the throes of this huge down move with the pound. We've kind of stayed in this channel a little bit, but not too much. And again, I would say that the pound can take us all the way down below 1.48. So Europe is just getting killed. There's no bullish divergence in this move either. Very difficult. Meanwhile, on the other side, the U.S. dollar is extremely strong. Look at this daily chart of the U.S. dollar. We've been bullish the dollar. There is no bearish divergence in this trade here. It is just really making a solid run for it. Where can the U.S. dollar go? Well, as I mentioned before in my sessions here, look at this, and let's just step out a little bit so it puts some perspective on this. This is where we are right here. I said the next logical position is at 96, 50% extension off the lows from the prior highs of the dollar, as it's been benchmarked. So we're sitting at about 93 right now, and I say this thing can go up to 96, and then we're going to start running into some trouble. There is no bearish divergence in this either. So again, as you can see, this can run up really nicely here to the 50. This is just, and if the dollar gets up to 96, it just means it's only captured 50% of the prior full move from the peak to the low. So again, we're bullish the dollar, bearish all other currencies, well, except the Swiss franc. Now, I think in time the Swiss franc will be a good one to trade. It used not to have a lot of liquidity because they had that cap on it, so it was an artificial environment. A lot of traders didn't trade it. And those that did just got burned because very few people were long the Swiss franc. So now, with it back in play again, we'll start looking at that as possible trades. Gold. I had people get long gold here a couple of weeks ago. We got long gold. We had a nice trade in gold. You can see this breakout right here. As soon as we broke out there, I got long gold. And you can see this run here. It's making a really good run. I do believe we're going to get some softness, but my projection for gold was right around 340, right up in this pivot area up here. It may take a few months to get there, but that was my initial projection for gold. Silver, as I told all our members, over the next 2 years, silver is going to be higher than it is now, and you can see the breakout we had finally in silver with this key pivot, and I do believe this is going to run up too. We're going to challenge the 200 EMA. There may be a little bit of softness, but I think longer term, silver is a good place to be. So I was having our members look at that for the long side. Oil. Well, we had a move up in oil, 2.23 on Friday, but be careful with oil, guys. We are just now getting a little bit of a bottoming pattern formed here. But understand what this pattern means. Typically, let's get this drawing off of here. Typically, when you have this kind of move like this, you're going to get a little bit of a counter trend move and then a final blow off bottom. Doesn't happen all the time, but that's kind of what I'm expecting. So a little bit of movement up here. We may even get it up to the 50 EMA up here, which is sitting right at about 60, roughly. So we may get that strong move up and then a roll back over again. Now remember, any initial move we're getting now, this is a crowded trade. And when I say a crowded trade, that means everybody and their uncle is short oil. And when that happens, you have to take the other side. Because when oil starts moving up, all these buy stops are going to be triggered, and that's going to accelerate the move up. You know, $4 or $5 a barrel. I'm not saying that it's going to go way up in this area up here, but I do believe we're going to have a counter trend rally before it rolls back again. So this may be an area here to come in and take advantage of. Now, if we were to do like I always do with our members, and let's come in and look at it on a 120-minute chart. It's kind of like our X-ray vision for the daily. You can see right here we had nice bullish divergence right there. So we got an early one, and then that would have been the trade we would have taken right there, right around 45, 48. And you can see this big, huge move up, this huge reversal, and then buyers stepped in again. So buyers are starting to step in with some of these reversals. So that's a good sign, all right? That is a very good sign. The next fundamental area we need to clear is $50 a barrel. If we can clear $50 a barrel, then I think we're going to have a little bit more of a run up here, 55, 56, before we get into trouble and it starts to roll back over again. So that's oil. Gasoline, another good one. I think gasoline is going to go higher too. If we look at the gas chart, let me put us on the daily first. We're coming into driving season for gas. Gas looks the same as oil. There is no bullish divergence here. We can have a counter trend rally up, a pullback, and then a final consolidation period. So we go into the 2-hour chart here on gasoline. UGA is the ETF. You can see the chart looks very similar to oil. Here we go. We're running up here. So that tells me gasoline can run up a little bit higher before it starts getting weak, and then we have a little bit of a pullback. Keep in mind, most of this run up in both oil and gas are buy stops being triggered because just about everybody and their uncle was short. So once those buy stops are wiped out and there's no more artificial buying going on with these stop positions or people already in it, will there be enough other buyers that want to come in and pick things up? If they do, that's going to carry us through another wave up higher. So this we want to pay attention to. All right, everybody, there are a lot of other things going on in the market. Members, Monday is a holiday for us. Our chat room will be open, but it'll be probably light. But we do have a session tomorrow night, Sunday night. If you're not a member, I highly encourage you to join us. Our end of holiday season or special is running out over the next week. So I would encourage those of you that like these weekly sessions to come on in. We got some nice trades that are running. We're making money as we kick off the new year. So hopefully you guys will come on in and join us. We're growing very quickly, so I think you'll enjoy it. All right, everybody, have a really great weekend, and I will see members. I'll see you tomorrow night. Bye now.